Well, greetings, my beloved clients and friends. Today is November 1st, and just want to recap October. October was a very a solid bounce off of the September lows. The Dow Jones Industrial Average of 30 industrial companies was up almost 14% in 1 month. I think it was their best month they had since the early 70s. But it wasn't across the board, because although the Dow was up almost 14%, the S&P 500, which is a broader index of 500 companies, was up 8 for the month of October. And the NASDAQ, which is 100 companies, it's more tech heavy, was only up about 4. So there was kind of a shift to more old school industrial kind of companies in the month of October. So where do we go from here? Well, we're about halfway through earnings season, and overall it's been pretty good. The big tech companies were kind of disappointing. Amazon, Google, Meta, which is Facebook, in particular, didn't have great earnings reports, which are companies we own. And and so that's kind of contributed to the NASDAQ not doing as well as the Dow and the S&P. And so what we got coming up this week, the Federal Reserve Board is in a meeting today and tomorrow. And tomorrow they're going to announce the next rate hike. It's expected to be 0.75%. And so there's a lot of hope, not a lot, but a growing amount of hope and optimism that this rate hike, though likely to be 0.75%, may be the last 0.75% hike in this cycle. So that hope has kind of partially inspired the stock market rally, if you will, in October. But there's been hope going into the past Fed meetings, and Powell has dashed that hope. And so there's a big risk that this hope that has been building up in the last month will be dashed again tomorrow afternoon. So I don't want to get overly optimistic that the worst is over. I think we should be realistic, and there's still some difficulties ahead. The inflation numbers coming from the rest of the world were terrible. I mean, it's really hot in Europe and Asia, and although they're in worse conditions than we are, but what's he going to base slowing down his rate hikes on? He said he's not too concerned about a recession, and we haven't seen any promising numbers. He's looking at data that's in the rearview mirror, so maybe he will shift from solely concerned about inflation to concerned about inflation and concerned about recession. That would be nice. So we don't know. We don't know what's going to happen on Wednesday. So we're just kind of preparing for it. And there was other reasons why people started getting optimistic at the beginning of October. Statistically, October is a month when market bottoms occur with a high frequency. And the third year of a presidency which we're wrapping up to, right? Biden's first two. The third year of a presidency is generally the best for a market. Prices are, especially they started the month extremely attractive. So there was reasons to have some hope, and that's why we didn't go 100% cash. I mean, we're kind of neutral. We don't want to be all in stocks, and we don't want to be all out stocks, because it's just unclear, But I will say this. So we're at the beginning of November, and our portfolio peaked almost exactly a year ago, along with the NASDAQ, like the first week in November. So we're 1 year into this pullback. The Dow and the S&P didn't peak till the beginning of January, but our portfolio peaked the beginning of November. So we're 1 year, almost exactly, to our market peak. And so prices across the board have come way down. And the more aggressive part of the market, the most forward-looking part of the market, really peaked end of January 2021. So they're 20, 21, 22 months from their highs. And those are the ones I think peaked middle of May. So, I mean, bottomed at the end of May. So I believe we're much closer to a bottom than the top. And the lows that were tested in the middle of June and the end of September, I think those are pretty close to a bottom. Those were really cheap prices that we saw in the middle of June and the end of September. And now we're off of those lows. So when you look out, there's a lot of bad news out there, and there's some also reasons to hope. So this is a really difficult time. Do you want to bet on the turnaround, or do you want to bet on it continuing, or do you really want to kind of stay neutral? Because the likelihood of both, there's a good likelihood, so we're kind of staying neutral right now, and it's really difficult because Warren Buffett says this, be fearful when others are greedy, and be greedy when others are fearful. Well, right now there's some people that are starting to get greedy, and there's some people that are still fearful. So what do? But I think it speaks to the point that there's no one tried and true solution, right? You can't say greedy always works. You can't say fearful always works. Sometimes it does, and sometimes it doesn't. You can't say optimistic always works. You could have a run where you were optimistic and it worked for a long time, and then all of a sudden it stops working. And you can't say cautious always works either. You could have a run where cautious really worked, and then all of a sudden it stops working. So you have to be flexible in this. You can say, well, what I've been doing has been working for a long time. That doesn't mean it's going to keep working. So there's a lot to think about right now. I've been spending a lot of time reading and thinking and praying. And if you're a praying person, I ask you pray for me, because this is a difficult time. And there's another saying that is, fatigue doth make cowards of us all. A famous military leader said that. And so a year into a market pullback, there's a risk that fatigue sets in, but that's something that we try to be aware of and say, no, I'm not going to let fatigue be my decision maker. I'm really not going to let greed or fear be my decision maker either. I just want to think and reason and and not solely let, well, what's worked in the past, that's not going to be my decision maker either, because that doesn't mean it's going to work in the future. So yeah, and we're in this transition. It's really tough, and you don't want to commit. You know, sometimes inaction is the best course to take. And even Warren Buffett said that the hardest thing to do is to do nothing, but it's often the best thing to do. That being said, inaction is not always the best thing to do, right? Sometimes it is time to take action. So that's why I get the big bucks, I guess, right? Because it's not as easy as it looks. But we're trying to make smart decisions, rational decisions. We're not trying to think based on emotions. We're trying to think long term, but not too long term, you know, because the reality is we need to be consider about what happens in the intermediate term as well. So we have to balance all those things, and I guess balance is really the word I'm looking for, and just reason, and not, there's not just a simple go-to formula that works all the time. So just something to think about as we enter this November. I do think that those lows we hit, like we said, are pretty attractive. If we get back to those lows, it'll be attractive again, you know, and we're not far from them. We're up a little bit in November. We're not far from them. So you got to think about the big picture, and the big picture is that we're in an unprecedented time historically when the opportunities are really huge, and technology makes things so amazingly simple. Like if you think about the iPhone, how I'm recording this video, and you're going to be able to see it in a few minutes, and that not just people with money in America have iPhones or smartphones. I mean, around the world, first, second, third world countries, billions of people have a computer in their hands, and in a lot of, especially in the emerging countries, they're being used for amazing things. Like in China, people hardly pay with money. They just pay with their iPhone or their smartphone. And I think the adoption in third world countries is even greater than it is here. And the things that enables, you know, my son is studying to be a jeweler, and he's going to a school called GIA, and he's realizing that he should probably, he's learned to be a gemologist, but he's realizing that he should probably learn to draw as well, because that's important for a jeweler. And so he asked one of his mentors, he goes, because the mentor, you need to learn to draw. And he said, well, what should I do? Should I take a class here? And the mentor was affiliated with that school. And he said, well, if you want to spend a lot of time and a lot of money, or as an alternative, you could just go to YouTube and learn. And it's true. I mean, the things that the iPhone has unlocked, the power that has put in people's hands, and that combined with, say, YouTube and Google, you could learn anything. And people are starting businesses, and, you know, a place like Shopify, you could start it very simply any place in the world and have clients any place in the world and get products from any place in the world. And these massive opportunities that are taking place because of the advancements in technology, and you wonder why Apple and Google and Amazon are so huge. It's because they've been so influential, and they've changed so many lives and so many change the way we live. I mean, that's not an overstatement. So, and they've created opportunities for so many people, and that's going to continue. So the capital creation that's going to unleash, and it has unleashed, will continue. Okay, so long term, that gives us hope and optimism that we're going to get through this. We just want to find the companies that will be the biggest capital creators, and wade through these difficult times, because like I said, winter's here. We just got to bear down and get through it, make smart decisions, and be very rational, and not just rely on what worked in the past or some simple trite truism. There's more to it than that. So just so you know, I mean, we put time and thought and effort and research and analysis into everything we do, and even with that, we've taken lives. I mean, like I said, we're a year from our last highs in the beginning of November, but I believe we're going to get through this, and I'm not fatigued, and I'm encouraged. I want you to be encouraged that we're going to get through this. Years like this will happen, but in the long run, we will grow and preserve your capital. Okay, so hope you guys have a wonderful day. I hope November turns out to be a wonderful month. We'll be excited what we hear. Well, maybe we'll be excited what we hear tomorrow, and the holiday season's coming up, and I look forward to seeing as many of you as I can, and being in contact in the days and weeks and months to come. All right, have a great day.